that supply is actually shrinking. And so that's a very bullish sign. Yeah, I think we will see some insane things in the next cycle.
Good morning, good afternoon, good night. Welcome to the BitLab Academy Saturday stream. We got another edition of the Alpha Series here on BitLab Academy, and I couldn't be more excited to talk with one of my favorite analysts. We had a great time really getting to know each other and talking charts down at Bitcoin Miami. He's a regular guest speaker at Bitcoin Miami, Bitcoin Amsterdam. He's all over the place, and he's all over the internet. He's sharing some of the most brilliant, deep thoughts on what's going on with the behaviors of different traders in the market. It's my friend, Mr. Rational Root. How you doing, sir? How you feeling? Let me go ahead and pop you up on the screen here. How you doing? We got the Root in the house. How you feeling, brother? Thank you for being here.
Thank you so much, Kelly, for having me on. Happy to be here and happy to talk some Bitcoin.
Before we go any further and dive into all this data, I got to ask you, Root, why do you think people should be utilizing on-chain data? Do you think it's something that's necessary for a trader? How does it benefit people? Why is it such an important aspect of blockchain and Bitcoin?
Well, on-chain obviously really gives you that edge, right? Like it's still a very new field. So like many people are using technical analysis in traditional finance, but on-chain is Bitcoin specifically, and it's it really brings a new perspective. And to have an edge, I mean, it's all about having that extra bit of information, which gives that benefit. So it's very useful for traders, but it's also useful for hodlers because understanding where you are in the market, understanding the psychology of the market, where we are in the cycle, it really helps you to prepare for a drop or an increase in price because you know, we were all emotional beings, and so it's easy to get you know, just like when there's a pump, the necessity or the need to sell. Do you feel like, you know, you want to make some profit, or you just want to buy more at the wrong time, or you know, it's all these feelings that constantly are kind of bothering us, where you actually just want to be rational when it comes to trading or understanding the market. And so I think on-chain is useful, especially. I mean, my platform is not really focused on day trading. It's more focused on the medium term trading, like trading the cycles, and also for hodlers to really understand what's coming, and so just to feel good, to sleep well at night, right? When Bitcoin has its usual volatility.
Does on-chain give a different type of edge than is available in the slower sort of data moving traditional markets, or is it a unicorn that we're able to utilize with investing and trading in this asset class versus traditional finance?
Yeah, I think so. I mean, it's what makes me so excited about this field, because the edge that on-chain gives, which is not really as accessible to the traditional finance. So think of all the hedge funds and you know, like people that manage portfolios, like they have no clue what on-chain even is, and so that gives us the extra edge, right? Like so I'm extremely excited. There's so much useful information about on-chain, and it's especially useful to understand where we are in the cycle, because if you think of the blockchain, you know, give me one block and I can kind of tell you at what position we are in the cycle, right? Because all that, you know, information is just in those transactions that are in such a block. And so it's really useful for that kind of purpose. For as far as predictive power, it's yeah, it does definitely have some predictive power, and we'll get to some charts for that as well. But I think, yeah, especially the edge of on-chain currently is like understanding where we are and what to expect. Not so much in like the very short term, but more on a bit of a longer time scale.
Without any further ado, Root, do you want to dive into some of these charts? Because I know the people they're here for the charts, and we got to give it to them. So here's the presentation, and why don't you just walk me through what you got here, Root?
Yeah, so we're obviously going to talk about the Bitcoin cycles, and we're going to look at some on-chain indicators, and this is actually, I mean, one of my more famous charts, the Bitcoin spiral chart. It's a 4-year spiral. So just a very quick explanation. I mean, you can also go to my to my presentation from Bitcoin Amsterdam, where I'll explain a little more better what the chart is about. I'm not going to dive into those details here. You can look them up. But very simple. It's one rotation in this circular chart is represents a time period of 4 years, and so we plot the Bitcoin price here, and each ring in this spiral, the Bitcoin price goes times 10. So from kind of the center of the chart, we start at a cent, we go to $1, $10, and so forth, and we can see that we get like a very similar behavior of Bitcoin's price in that 4-year time period. That's why the 4-year cycle is so famous to Bitcoin, also to traditional markets, because in traditional markets, the PMI cycle or so also tends to happen in like a 4 or 5-year time period. But so we see these blue dots here in this spiral chart. Those represent the halvings. And so I added here all the psychology of the market into this chart. And so it's, I mean, maybe you can pause the chart for just a second, Kelly, because I don't want to go through it like too fast. So when so around, I mean, here you can see it clearly. Those green dots on the left side, those are the cycle peaks, and they're all in a similar area in this spiral chart. As for the bottoms, which are here shown in the top, those big red dots, those are the bottom of each cycle. And so the halvings also, those are the blue dots, these light blue dots. They kind of happen in the same moment in time, a little less than 4 years. That's why they kind of tend to move back a little bit with each cycle. And so the next halving is projected there with that blue line as well. And so what I try to do here, I try to combine several things. I actually try to combine for this chart on-chain analysis, which I show actually this color-coded price, which is actually based on behavior of short-term holders. So people that only bought Bitcoin recently, those are the ones that are most affected by price, and so they are most influenced. When there's volatility, they are very price sensitive, and so if we look at their cost basis, we can actually see what their average purchase price is. So this is here again the use of on-chain. And we can also look at like how far is the price from the cost basis. So with other words, are those short-term holders in a high profit, or do they have a high loss? And so that information is kind of put in the price here. And so you can see those dark green colors, which represents that these short-term holders are at a substantial profit, and the dark red colors are when they are at a loss. And so this really gives this information from on-chain. And this actually tells us a lot about the phases. So what I try to combine here as well is so the 4-year cycle, the spiral chart.
I want to pause you just for one moment, just for everybody out there. Sometimes we have a lot of alpha heads in the house that have a lot of experience. Sometimes we got to throw the rope back for the beginners. Can you just give a very brief description of what cost basis is so people can understand why that's relevant to us looking at price and where it's at and where we may be in the cycle?
Yeah, so it's the average purchase price of the short-term holders. So the short-term holders are people who bought their Bitcoin less than 5 months ago, and so their cost basis is very important because they are the most price sensitive. So the longer you hold Bitcoin, the less price sensitive you become. And that's why the hodler groups in Bitcoin, they are all the long-term holders, right? They held Bitcoin for a long time. And so but when you bought Bitcoin recently, for example, you bought the 69K peak. Now you're a lot more price sensitive when price starts moving. You're much more likely to sell that Bitcoin because you're like immediately at a loss. And so these the cost basis of the short-term holders, or the average purchase price of all these combined short-term holders, that's what we look at, the average purchase price. This is a really important level, because if price is above that short-term holder price, then we are kind of in a bull market, and if it's below, we are in a bear market. And so what I did here in the color-coded information is kind of to show when price is above that that short-term holder cost basis, it becomes you get these yellow green colors, dark green being very high above it, so that meaning that those short-term holders are in a high profit, and these dark red colors show these bear market phases. And so what I also tried to do in this chart was to really combine the Wall Street cheat sheet, which is a very famous chart in traditional finance, which talks about the psychology of the market, and to apply that to Bitcoin in the best way possible. And so that's why I aligned all these different phases of emotions that people go through in a cycle. And we are actually now in the disbelief phase. And the disbelief phase, and this chart has already been live a year or so. I've been sharing it for a long time. But the disbelief phase is actually, so one of the feelings that will happen is like you will feel like, oh, this rally will fail like before, right? Like that's kind of the natural emotion that you will get. Again, there is a rally, but you don't believe that it's true that it will go up. But actually, what we see now is that rally that we got is actually that sustained rally now, to 35K, and it seems a very sustained rally up until now. And so that brings this disbelief. So really shows that we're in this disbelief phase, and we're only 5 months away from the next halving, right? So we still got the phase of doubt, like where people are going to doubt, like, oh, is the halving actually priced in? Because people, we just came from this depression, capitulation, enduring. People were so kind of tired of Bitcoin's price they had to go through all of this pain for basically the last year. And so there's still a lot of doubt and disbelief, like, will the next halving do the same? But each cycle we see the same thing happening, right? So,
well,
and the halving will give this.
You know what I love about this chart too? It just really, really, really visually emphasizes that nature of euphoria that we talk about here on BitLab Academy, here on Discover, and anybody that's been in the markets for a while. When you start taking snapshots of your portfolio because you can't believe how up it is, and your mom and your pop and Aunt Linda and Uncle Larry and the Uber driver, that's that euphoria stage. And this is when everybody's in profit. Short-term holders, everybody. Long-term holders, everybody's in profit. Long-term holders likely have been starting to take some profit off these levels as well. But we see here capitulation. When everybody's so scared, this has proven to be the best time to be buying in the market. And look, they all line up relatively about the same time because it's based on those halving cycles. And that's one of the things I love about your analysis route, is that you lay things out not only on these spiral charts, but also how you overlay, which I know we're going to get to some of these charts in a bit, the different halving periods and how cycles have acted from the halving date forward to the next halving, and seeing the relationship of where tops line up regionally, roughly about the same time period in number of blocks, and the bottoms in market cycles happen roughly about the same time period. And so anybody, when you're feeling lost in these markets, you can look to the halving and the cycles and how things have acted in the past, and not get an exact data point on the day, time, minute, and candle you should be buying and selling, but it will regionally give you at least some roadmap as to what would be the likely best strategy to start employing at different parts in the market cycle.
Very well said. Yeah, and I to add to that, I think, this chart is especially useful as well to just kind of deal with these emotions that are going on, because the emotions are literally written down with each phase of the cycle. So I encourage everyone to check out this chart at least once every 3 months, because each phase is kind of a period of 3 months, and to kind of read that emotion and see if that kind of aligns with the emotion you have, because it's a natural emotion for to come up. Like is the halving priced in? Probably people will start thinking soon next to the next halving, and then people start to get hope in the halving, and people start becoming a little calmer when price starts going up. But actually, the next year and a half looks very promising for Bitcoin in terms of the cycle. Now, we have a recession on the other hand, which is another topic. We can get into that as well a little bit. But from a cycles perspective, the next year and a half looks actually amazing. We just came from a year and a half of pain, which is kind of the worst period to go through in Bitcoin. But the next year and a half looks very promising.
I mean, look at that, everybody. It went from denial. It's not going to go down any further. Panic. Damn it, it went down. Why won't it stop? Okay, finally, I'm going to cut my losses. And what happens when everybody cuts their losses? Right here, you cut your losses, and this proves to be the worst spot to capitulate, which is why it's called capitulation, because this is where the market bottoms happen. These are these red dots that he has outlined right here. And then depression. Some people are depressed because they sold, way below their level. Other people are depressed because they feel like they made a stupid decision. And both of these come from lack of patience and lack of strategy. And then it comes here with the enduring. These are the people that have been holding on or have been buying and just waiting, wanting it to go up. And finally, people get bored. Can you guys remember? I know here as a content producer here on YouTube and Twitter and all the Instagram, all the different sites, this is where we also see a very lack of engagement because people don't care anymore. But this entire time period from capitulation all the way into stagnation, this proves to be the best time to buy in any cycle. And then we get the disbelief because it's starting to push up and people don't want to buy. We get the crypto savvies of the world. We get the other people out there that says it's going to go back down and it just runs away and without you, and then doubt, and then hope comes back in. But then there's a little bit of depression that comes in with this as well. For those people that are so upset they sold here, and now they're wondering, they're only starting to get interested here, likely buying somewhere over here. So this map is great, Root. Really, thank you for sharing this.
So maybe we can like zoom in then to like so if we think now we are in the disbelief phase. So if you would like imagine a line from the center of the chart and then to the current price, like so exactly that line, that we can actually kind of zoom in on that area to look at where we are currently in the cycle. In the next cycle analysis that we'll do in the next slide, we're going to look into that. And so the line here in the middle, you can feel free to go to the next slide. So the line here in the middle is actually right where we were at, like in that spiral chart. And then what is projected now is again 2 years in front of us and 2 year behind us. So the 2 year history and the 2 year in front of us. So exactly from the date of today, I mean it's today the 9th of November. But so that is where our starting point. And we can actually see. I color coded here the different cycles. So the last cycle being this red pinkish color, and we can also see the halvings there. Those vertical lines. So each halving, and those are also colored by the halving belonging to each cycle, right? So you can see the halving kind of move back a little bit because that each halving cycle is just slightly less than 4 years. So that's why that halving is kind of pushing back a little bit. Now, this is a very interesting chart because the bottoms here, just as we outlined in the spiral chart a minute ago, you can also see that they're more or less aligned here. So, by the way, the other price that we see here, these dotted lines that we show, that is the realized price, which is a very fundamental on-chain indicator. Where I was talking before about the average purchase price of this group of short-term holders, we can also look at the average purchase price of all Bitcoin, so of everyone included, the holders included. And so that is what the realized price is. And this is a very fundamental on-chain indicator because it's only during these bottom formations that we fall below that average purchase price, which you can see with each cycle. And so even at more or less the similar moment in time, we fall below that realized price. And we make the bottom, and then we start kind of like recovering. So the first sign to get start recovering is going above that realized price, and then we're now heading up to the halving. And so in the next slide, we're going to actually look at this same view, but instead of looking at the price, we're now going to kind of combine them together. So now I align each of these cycles by the realized price. so because the realized price is a good indicator because it has less volatility. So price will kind of hover above or below realized price. But since realized price is a lot less volatile, we can see that those lines of the realized price, they kind of move in a similar fashion for each cycle. And so also the trajectory for that realized price will likely be the same in the upcoming 2 years, let's say. And so what I do now is, like, on a percentage basis, actually you scale the previous cycles to the current cycle. So we even see the price information of the current cycle, but then we have the previous cycles kind of aligned there. So if we would expect to have more or less an equal amount of returns as the previous cycle, we would get a price of around 200,000 Bitcoin, which you can see the orange line a bit further. Any questions, Kelly, before I continue? Or
No, I mean, this is great. It's one of those things I think all of us need to pay better attention to, because I've been in the markets for years and I still find myself in those different stages, like we were talking about before: hope, fear, depression, all the different. It's like the different wheel of grief that you have through markets, right? But then when we look at this data and look at it in the different ways you're aligning, actually, I think this is the first time I've seen this 4-year cycle chart with the price aligned by realized price, and we're seeing the oscillations of the price, both having standard deviations moving above it, positive growth above it, and also these areas when price actually falls below it, like we have here, here, and here, and how price has performed. These are the 3 different halvings. This is what we're coming up to. This is the 2019 halving, and then this is the 2015 halving, where price went. And if we use that as an extrapolation, where price may go post halving, this really brings a lot of confidence into we're exactly where we should be. What's your strategy to dominate?
Yeah, so there's different views to align cycles. I mean, there's no one perfect view of how to align cycles, but what I've been trying to, and I've tried more or less like every way possible to align cycles, like to like really find like what is the best view. And it really also depends on the moment in time, right? Like now, I find it useful to look at a chart of cycles to align them by actually the halving. So we would actually combine all those 3 lines that you can see here: the pink, the orange, and the yellow. Like if we combine them, know that the halvings, the vertical lines. So if we would align those vertical lines together at the moment in time, and then see like how many days do we still have until the halving, that's another alignment, right? Like we could do that alignment as well. And I've charts about that alignment as well. I think it's useful to use both. But the one I use here is to actually just exactly show that 4-year cycle, because as we saw in the spiral chart in the beginning, that the 4-year cycle is so on track, like with those peaks and those bottoms, that it's very useful to have that view. And so because the halvings are kind of they kind of shift a little bit with each cycle. They function like a catalyst, but then still the seasonality of each period in a year still has its function. And somehow, or since as humans we are used to like a calendar, so we think in normal human time, we don't pay attention to like block time Bitcoin's having, let's say. So we're more our seasonality is bound by human time. And that's why even though the halving is kind of shifting and all those kind of catalysts that happen in the market, they still we still fall back again in that 4-year cycle somehow. And so that's why I think this view is a very good view. And the alignment of realized price, I think, is just a very good way to align cycles, since the volatility doesn't show as much in that realized price. And so I think this is a very useful chart to kind of know what to expect. And we can see that drop there in the orange price. That was the COVID drop in the orange line right before the halving. That steep drop there, that was like the COVID. This is a little bit of an outlier, since it was a kind of a black swan. So unless we get another black swan event, I don't think that is likely that we will drop, because there was literally a drop to realized price with when that happened. That is obviously kind of an exception. So yeah, I think we can maybe look a bit again at the time period we're in now to look a bit about what is Bitcoin supply actually doing in this area. So let's kind of zoom in now on the current price, and here you can see again the price info in the top a little bit, and so we can see that gray area of the price. So we're looking here at the we're going to look at the supply distribution. I'm going to explain it a little bit what's happening here in this chart, because there's a lot to see. But so what we did, so there's currently there are more or less 19.5 million coins in circulation in Bitcoin. Now, all those coins were bought at a different price. So what we plot out here is we make buckets, and we kind of show how much coins were bought at these different price levels. And so we can clearly see immediately that actually two candles are, or two bars, I should say, they are really sticking out. And in the beginning of the chart, those two high bars, that those were actually the bottoms of the previous cycles. This was the bottom of the 2009, early 2019, I think. And oh wait, no. So that first one, the which is the 3K bottom. So that's from previous cycle, and so the past cycle was actually the 16K bottom, which we made. That is that high bar there that you can see, the second one. So this is actually the decapitulation event, when everyone capitulates, which is clearly visible again in the on-chain data. And so I think that's kind of interesting to see. So now I kind of want to run through this, like what is happening. So where, obviously each day these coins change hands, and so what is kind of like, how is Bitcoin moving here? And so we're going to move from maybe from where, maybe you can still point out from where in the price chart we're kind of moving. Yeah, we can replay that once maybe, because it goes a little fast. So we actually start there from kind of like where we start consolidating after we made the bottom. And we had kind of at the beginning of this year, we had like a very good start in a way. We kind of doubled in price, and then we kind of we came into this reaccumulation phase where Bitcoin really was reaccumulating, and we can see that really in the supply dynamics here. We can see price moving here, and we can see these bars, and it's kind of building up a base here where at the end of this, so here is more or less 23% of all supply is now sitting in that area. So we really are building up this strong base here. You see actually that a lot of that Bitcoin that was bought at the or sold and bought, obviously there's always a seller and a buyer, but at that 16K area, that it goes from 5% of the supply, it kind of moves below, but still remains high. It still remains above 4% currently, and that is the decapitulation candle that we or bar that we had there. And so we really build up a strong base, and you can move actually now to the next slide if you want, Kelly. So we add some more information here.
Is this
one more time? So you can see the price moving actually, this darker bar, and then so here, this is where we end up. And so I showed here's the December 2018 bottom and the November 2022 bottom. Those are those capitulation candles or bars that I should say. And so the current area is 23% of the supply was kind of sitting in that current price range. And now we can see that we have these 10K steps, like so if you think of the bottom, so we started at 16K, then we go to 27K, where is like in the middle of that area, and then we go to 38K, so again a step of 10K, and then 47K, and we kind of see these steps of 10K each time, and those are these psychological levels apparently for people out there, and so since there was like quite a bit of supply bought at that 30K area, it's also likely that will potentially give a little bit more resistance to go past, right? And so if we play out the next the final pump that we had now, we can actually see, so from that base that we had, we kind of move towards that 38K area, and it seems that we will have some resistance there at the 38K area. And so
yeah, that's really interesting. It's great because you can watch different levels of where people bought basically selling out of those positions and different sort of levels having more interest in as these move along. I never really noticed this. Like, as you said, it's, 17, 16, 17K, 27K, 38, 37, 38K, 47, 57. Really interesting because everybody wants to argue that it's round numbers like the 50, 20, 100. And it's interesting to see this actual data on the charts showing where there's a supply distribution.
It's maybe that people want to front run a little bit. Like they think like, hey, 40K is psychological level. I'll sell a bit or buy a bit before, to be safe. And so that's why that's my explanation for it. But I don't know. But apparently they are psychological levels that we're dealing with, like it's visible in the data. So, okay, so that's kind of what I wanted to show. And so since we are talking about supply, let's continue about supply because so we talked about the short-term holders in the beginning, which were like susceptible to this price action, but it's actually the long-term holders that have really an influence on the market as well. Because they actually are what make Bitcoin scarce, right? There's only 21 million Bitcoin out there, or currently 19.5 in circulation, many of which is lost already. So the coins that are in circulation, that are kind of actively in circulation, many of those belong to this hodler group, and since these hodlers are, they just want to stack Bitcoin in general, and they believe in Bitcoin's purpose, they actually are what make Bitcoin more scarce because that supply is kind of unavailable or illiquid, you could call it as well. It's kind of not available to the market as much, and so we can see now that we're at all-time high levels in terms of this long-term holder supply, meaning that that a lot of that Bitcoin supply now is in the hands of hodlers and is not really available on the market. Now, these long-term holders, obviously, these hodler group, they also do sell a little bit, and that's why we can see these drawdowns in this long-term holder supply, especially those correlate with those blue dots in that price line that you can see there. Those are actually the all-time highs that we make in each of these bull markets, and so these hodler groups, they really sell off a bit of their coins into a bull market, and that is normal because when price makes a new all-time high, there's obviously the maximum incentive to sell some of that Bitcoin, right? And Bitcoin has never been higher at each moment in time when it reaches such a blue dot. And so there's always a maximum incentive to sell your coins. And so with exponential price increases, obviously everyone wants to take some profit. And so it's natural that some of those hodlers sell off some of their coins during these exponential price increases, which then are usually bought up by the next generation of Bitcoiners out there, and so that's clearly visible in this long-term holder supply, and the long-term holder supply is actually a time-based measurement. So it's so if you hold coins for a time period longer than 5 months, you automatically become a long-term holder because your Bitcoin, the supply that you own, is then a lot less likely to be sold. And so that's kind of like the long-term holder supply. So it's kind of bullish that we are at this all-time high in long-term holder supply, because that at one hand it means that supply is very scarce, and this is on a percentage basis, by the way. Yeah. So the obviously the circulating supply has been increasing, but on a percentage basis, we are at an all-time high in long-term holder supply. On the other hand, like maybe one could argue that since we did have a bit of a disappointing bull run in the last cycle, at least in price-wise, I mean, many people expected, again, prices above 100K. You could also argue that some of those coins that are still in possession of this hodler group, people would maybe be happy to sell them, above 100K prices, and so that could give potentially some extra resistance going above these 100K levels, like cycle peaks that people were expecting in the previous cycle. It's just something to consider, in my opinion.
We had a massive pump this week in Bitcoin in the crypto markets. We're kind of, as you said earlier in the charts we were showing with the market cycle cheat sheet, with the spiral graph that you show with the emotions attached, disbelief. We are pumping. It's exciting. There's some people that think that we may be in for a super cycle coming in post-halving because we have so many ETFs, we have institutions, the FASB, fair value account, everything feels like it's set up for success for an ultimate incredible bull, onboarding of new people and new capital coming in. 100K is a number that was elusive. It wasn't only elusive, it didn't even peek around the corner last cycle because it got very truncated when we see this Chinese mining ban that happened here, and then basically just supreme hope that really drove the prices up here. Lack of willingness to sell, really. It was no new demand. But where do you sit in the camp of where Bitcoin's going and in this next market cycle top? Do you think there's going to be a lot of people taking advantage of any price that's near, maybe just below or even just above 100K? Or do you think that we're going to have that huge flood of new interest in the market and new capital, maybe some money printing as well? Do you think we're going to get that, at least one super cycle where we're eclipsing the gains in percentage basis that we saw from this previous cycle?
Good question, Kelly. Yeah, so I sit in a camp where I've been around for some time, like a couple cycles now, and so people have been talking about super cycles. Also in the previous cycle, people were, me included, even. I believe that potentially, we could get lengthening cycles or a super cycle, and so I was wrong there, so. We are exactly on track in a 4-year cycle, as I just showed. And so I believe it when I see it, so I do think an ETF is extremely bullish for Bitcoin, and price wise. The custody wise, maybe a little less bullish, but price wise is extremely bullish for Bitcoin because there's so much capital out there that is just not easy accessible to. It's just not, Bitcoin is not easy accessible for so much money. There's so much friction, regulation, and so an ETF provides this frictional acquiring of Bitcoin for so much money from pension funds, endowments, financial advisors, and so forth. And so, so it's really a catalyst in demand. I think, and we could get it by the end of this year, or maybe before January 10th. And so it's something really to consider. I wouldn't want to be out of the market currently, because there's quite a high chance that there will be an approval, since BlackRock is involved and many others. But there's still some concern. There are some concerns that the ETF might not be approved, and previous rejections were mainly because of that there was still wash trading and stuff going on, some shady things going on, and that's still not all cleared out because there's still this case from the SEC with Binance, and there's still some shady stuff going on in Binance. I think many would agree with me. So that is still a reason maybe why it wouldn't get approved. But on the other hand, we have involvements of BlackRock, which have a very high probability of approval. Their approval rating is 99%. I think they only had once that something was disapproved. So there's a very high chance. But I've been waiting for years on an ETF approval. It's been when I got in the market in 2016, and so people were talking about an ETF in 2016. I think as far back as in 2013. So it's been for 10 years, but the market has matured a lot, and I think Bitcoin is actually ready now. And so and there hasn't been a higher likelihood of approval than there currently is. And so I really wouldn't want to be out of the market, because I think once there is an approval, and we saw a bit of a glimpse of it with this fake ETF pump that we got, that the market can immediately pump 10K on that day of approval. And that is obviously speculation around the approval, because I think actually, once there is an approval of an ETF, we will get more gradual demand for Bitcoin through that ETF. It's not immediate demand. It's maybe some of it will be immediate, but there's still internal policies of companies that kind of cause these delays in acquiring, and so even if we have an approval, it might still take months to build up this to get like new demand for Bitcoin. And so, but I do think it's a fantastic catalyst for new demand coming in. And so I'm extremely bullish on Bitcoin, because not only do we have a reduction in supply with the next halving, which is less than 6 months away from now, and we have also a very likely increase in demand with an ETF approval. So we have like these two catalysts out there that I've been talking about in my newsletters now quite extensively as well. And I think those are very worth to pay attention. And as I said, like, so I wouldn't want to be out of the market, because if there's going to be a pump, I mean, I really don't want to be out of the market. Now, I still think there's a reasonable chance that it won't get approved. And then we'll just continue on a slower pace. I still think my projection towards that next halving is actually 40K Bitcoin, 40K Bitcoin, which I find reasonable, without an approval. But if we get an approval, I mean, we can shoot above, and that's okay. Like maybe. But obviously, those levels are not immediately sustainable. Current levels already, we're quite high above the short-term holder cost basis. Again, above that average purchase price of the short-term holders, and so that can only be sustained for so much time, right? So there will be corrections along the route as well, and I'm here for it.
I do want to say, I got to ask, everybody's wondering, you're the on-chain guy, you're the analytics guy. I know we got a lot more charts we're going to be going through here in a moment, but while we're on this topic, having around the corner, everything feels so bullish. But is this an opportunity for basically the market to counter trend what everybody's expecting, because everybody is so bullish right now? Do you think we're going to get any type of sell-off like we saw in 2018, 2019, where we had the push from 35 to 14,000, but we had a pre-halving dump that was pretty significant? Do you think we have the sort of recipe, the ingredients for that to be happening right now? Or is there too much bullishness out there? Is the market just going to sustain somewhere around this level, even if it goes up and down, but above the 36K level before the halving?
Yeah, so I think if the ETF wouldn't be approved, that would definitely be a reason to dump for a bit, so I think, but to be honest, I think we will stay above 20K. Like I've never been part of the 10K crew. That there's people out there that believe that Bitcoin would fall back to 10K. I was not one of them. I've been consistently saying that we'll kind of stay below 20K, and so I mean, we can see that realized prices at those levels. There are some other great bottom indicators that kind of show that is unlikely to fall below those levels, and so I think it's possible to continue still. I mean, with some chop. To continue until like this ETF approval, and then it depends kind of like, do we get an approval or doesn't? If it doesn't get approved, like maybe we dump and we have like a fierce correction still before the halving. But the halving is also around the corner, and so I still think people. It's not priced in my opinion. So there's still a lot of fun on the road to the halving, I think.
Well, again, everybody, as you're watching, make sure you head over to @TheRationalRoot. You can see it right here on the lower third under his name right here. I'm going to replay that. There you go. Make sure you check him out. He's also got a wonderful newsletter and a website, Bitcoin Strategy Platform. But we're going to dive in. We got a lot more long-term holder cost basis. Talk us through this. What is this signaling to us? Where are we at in the market? What can we learn from it?
Yeah, so we talked previously about the short-term holder cost basis, the average purchase price of short-term holders. Now we look at the long-term holder cost basis. So this is the average purchase price of these long-term holders, the group of hodlers that do not really sell their Bitcoin unless price goes exponential. And we can see that cost basis line, which Kelly is showing now. That is the cost basis. It kind of moves up in these new plateaus that which each cycle we kind of move like a plateau higher.
What moves it? What makes the cost basis this average? What makes it go higher?
Yeah, so if price moves up and there's like a new generation of people becoming a long-term holder, obviously their cost basis was at a higher price, and so that's why this cost basis starts moving up. Now, when people sell, so actually when long-term holders sell in a bull market, like those, and they sell for profit, then actually some of that, imagine someone had Bitcoin that he bought below 10K. Now he sells it at current price levels, then obviously that 10K price will become a 30K purchase price for that same Bitcoin. And so that makes as soon as that person, it depends if a long-term holder buys it or a short-term holder buys it, but as soon as that Bitcoin again becomes long-term holder, then that price is now 30K instead of 10K, and that's why that average price is moving up. So it's showing the average purchase price of all these hodlers together, or I mean, it's the long-term holder cost base, the long-term holders, but it's a proxy for the group of hodlers out there. And what is interesting to me is that, I mean, so we can see these plateaus in this average purchase price, but the other indicator that we're showing here is actually the change in that cost basis. So we actually show like how much is that cost basis increasing. So do we have a steep increase? Then we see also a steep increase in that change. So it's the first derivative for the more mathematical advanced people out there. So it's the change in the cost basis. And so as long as that value is above zero, then that means that the long-term holder cost basis is rising. And if that value is below zero, so that's kind of marked by that light color there below zero, you can see that then actually the cost basis is decreasing. And so again, we can see that there's actually more information out of that cost basis that we can extract by looking at the change in that cost basis. And we can see that we had a period where the long-term holder cost basis went down, and we're now moving back out. So we're again in positive territory now currently. And so we can actually see how similar it moves to previous cycles. We always had that high increase, like to go to a new plateau, and then followed by then being at that new plateau, and then slightly that the long-term holder cost basis went negative, and then it became positive again, and we have seen it cycle and cycle over. And so this cycle is not any different. So again, it's one of those signs that the hodler group is doing exactly the same thing as it was doing in the previous cycles. And so therefore it's also, I have no expectations that suddenly things are going to deviate from the 4-year cycle based on seeing just the same thing playing over and over, right? So that's one of those reasons why I'm not a great believer of super cycles or shortening cycles or lengthening cycles. For now, I think the 4-year cycle is the most likely path forward.
For anybody that doesn't know, long-term holders, you want a really good opportunity to figure out where maybe you're near, not at, but near or nearing a market cycle bottom. Once price is breaking down below this long-term holder cost basis, you can see this is proven to be, this is great accumulation, great accumulation. We tapped it here, great accumulation. We broke below it here. We held right near it, but final FTX collapse here. All great opportunity once price is below it. And we're also seeing the rate of change here. This is such a great chart, Root. Really great chart.
Yeah, so let's continue a bit more with like this group of hodlers, because we're going to get to kind of the climax here in a little bit, but so there's various ways. Obviously, there's no single measurement that's perfect, a perfect view of reality, right? Like all these indicators, they kind of help us to kind of find out like what are the long-term holders doing, or what is this group of hodlers doing. And so the two main indicators that we can look at for this group of hodlers are actually the long-term holders supply and the illiquid supply. I'll quickly sum up the difference between these two. So the long-term holders, we already looked at a little bit for now in a couple of charts. Those are time-based, as I said. So if someone holds for a period longer than 5 months, so that's the black line that you can see here in the. So actually, to start with, we see the circulating supply in orange here. In the bottom part of the chart, yeah, that's the circulating supply. So we can see currently we're at this 19.5 million coins, and so the long-term holder supply shows that black line is actually showing the part of the supply that belongs to this group of hodlers. So we can see that currently we have a little over 14 million coins that belong to this group of the long-term holders. Now, those long-term holders are a time-based indicator. So if someone holds a coin for longer than 5 months, he's less likely to spend and then classified as long-term holder. And so that's a proxy for this group of hodlers. Another way to look at this hodler group is by looking actually at spending behavior. And so that's what we do with the illiquid supply. So supply becomes illiquid if an entity spends less than 25% of their coins. And so that's another way. So it's not a time-based variant. It's actually, it looks at spending behavior. So how much does someone spend on chain? And we can see actually that they kind of align. So we can see that it's difficult to say which one is better. Both have their pros and cons, but they kind of show we're in a similar area here, like around that 14 15 million mark there of coins that belong to this group of hodlers. And we can see in the time-based variant that we get these significant drops along each cycle, those drops are actually when this group of hodlers sell off some of their coins. That's why we got a drop in that long-term holder supply. It starts happening when we got these exponential price increases. And then the group that buys those coins up, they become long-term holder again. And then we kind of continue the path. In the illiquid supply, we don't get to see those drops, and that is because also if someone new buys a coin, he will be immediately classified illiquid until he spends his coins. So that's why we don't see these drops in the illiquid supply. And so, but all that to say that I think these measurements are pretty accurate measurements of the amount of supply that belongs to this group of hodlers. And so the interesting thing here is that the supply that doesn't belong to that group of hodlers, so that's actually the available supply for trade, that is kind of shrinking since the third halving. And so we're gonna look at that in the next chart. So here, this is the HODL model S. It's a model I made already quite some time ago, 2 years ago or so, I think. So this is the optimistic version. There's also a more conservative model out there, but just for simplicity reasons, it's easier to explain the optimistic model because it's a bit more clear what's going on. So we can see here again the illiquid supply here is plotted in that top chart. Also in the bottom chart, it's both the illiquid supply. One is on the percentage basis, the other is just on looking in real terms. And we can see the HODL model is that kind of the projection of what illiquid supply will do if we continue kind of on the same path that we've been on. And we can see that we're currently even the optimistic model is conservative currently because the illiquid supply is even faster than the actual model value. But what we can see is that the orange part of the supply is becoming tighter and tighter, towards that fourth, fifth halving. And so that's actually the available supply for trade. So if the supply that does not belong to that group of hodlers, and because the circulating supply is diminishing with each halving, so the steepness of the curve of the circulating supply is kind of diminishing with each halving, and the illiquid supply keeps on growing on a steady basis. That's why the supply of Bitcoin is actually shrinking, because in the beginning we had a lot of inflation in Bitcoin. I mean, 50 coins every 10 minutes were added to the network before having one, then 25, then 12 and a half. And so that is diminishing. And so Bitcoin, we're now, since the third halving, it seems we have passed the point where that rate of new supply issuance is going at a slower pace than the growth of the illiquid supply. So illiquid supply is outpacing new supply issuance, and Bitcoin is actually becoming more scarce for the first time because of the high inflation in those early years. And so if we zoom in then now on that orange part, because that's what we're going to get to. So if we look at that available supply, so the orange part here that we can see, if we zoom in just on that orange part and we look until today, we get the available supply for trade, which is the next slide. And here we can see that since the third halving, that supply is actually shrinking, and so that's a very bullish sign, because that would mean Bitcoin is becoming more scarce. and that actually also means that perhaps we get an increase in volatility instead of like diminishing returns.
So would you say, let me ask you a question here. Would you say that, I mean, it's pretty remarkable to think that we've had this incredible price growth in early Bitcoin life cycle, right? Early on in the asset's life. Of course, we had a very lack of need for, we didn't need exponential monetary energy to grow early on because there was so little liquidity available. But we also see a lot of new supply coming on the market. I mean, we had 19 million Bitcoin come on the market in about 12 years, 13 years, and it's going to take another 100 plus years to get the last 2 million. And it's because of this Bitcoin halving. But we're seeing massive explosion in Bitcoin price. But what's interesting here, I think a lot of people forget too, and this is why these charts are so great. Here, we need a huge amount of monetary energy to get us from 500 billion to a trillion to that 10 trillion mark, like gold, like people are talking about, maybe beyond 20 trillion, whatever that is. It's going to take exponential monetary energy. But what this would suggest is maybe it's not as pronounced as people think, needing so much exponential monetary energy, because we're also having increase in the amount of effect that demand has because there's less available supply. Would you say that's a good way to think about it, or am I way off the mark?
No, exactly. That's it. So because supply is shrinking, less energy is needed to move the price, right? Like less monetary energy is needed to move the price. And so so we can see that the third halving is actually the most abundant Bitcoin in time. We have around that 5 million coins that are really available for trade. Now, it's not to say, so it's not a perfect measurement again. So the group of hodlers, as I just explained before, there's two ways to measure this group of hodlers, and it's not a perfect measurement. But all in all, it seems that if we look at the liquid supply, long-term holder supply, they kind of move in a similar fashion. And so that kind of gives a bit of confidence that it's a fair measurement. And so if we think of this supply as belonging to hodlers, that doesn't mean that it can never be sold, because we can actually see that this supply from hodlers also will be sold in those price increases, in this exponential price increases. But only then, right? For the rest, it will kind of be a hold. And so because that supply is locked up, so much of that supply is locked up, because we saw in the beginning all-time high in that long-term holder supply being locked up. And so that is not part of the available supply for trade. So there's less supply on the market. And so new demand will have to make use of this very little supply that is available, which will cause an increase in volatility. And so since that third halving, we've kind of been moving down, but at a slow pace. We've been moving down. And so it's also, it kind of shows that we were still around that 5 million mark in the past bull market. And so it isn't all that strange that we had kind of disappointing returns in the previous bull market with like quite an abundant Bitcoin, whereas in 2017 Bitcoin was a lot less abundant. Bitcoin was more scarce, and therefore perhaps we got like a higher increase in returns as well. And so the theory here is, and it's an hypothesis, and the next cycle will kind of verify if this hypothesis is correct. But I mean, I'm showing here what the data says. I mean, I'm not making it up. There's like these fair measurements. We could argue about the validity of these measurements, like long-term holders and a liquid supply. You could argue that those are not fair measurements of this group of hodlers, but I think they are reasonable. They're not perfect, but they're reasonable. And so it is, likely, in my opinion, that we will actually see higher returns in the coming cycles instead of diminishing returns, or at least it will be a force. Yeah, exactly, right? Like, no, at least it will be a force that will cause returns to increase rather than to decrease, because obviously there is an increase in market cap, which is always kind of like this downward force, like, because there's more, as you called it before, this monetary energy, or there's more needed to move the market from this 500 billion to a trillion, or to 10 trillion. And so it is not so that's a natural lock growth curve, let's say, like it kind of this diminishing turns theory, and that's a very conservative theory. I'm not against the diminishing returns theory at all. I think the log growth curve is still a very conservative way of looking at Bitcoin's increase. But I do think that this actually increase in scarcity of Bitcoin since the third halving might cause also an upward pressure. So I wouldn't be surprised if the next cycle we will actually see returns similar to the 2017 market, or in between the past market and the 2017 market, because of course we have the force of this increase in market cap that kind of puts like this still a bit of down pressure to like the market is harder to move. But then the scarcity increase in scarcity will again cause a bit more volatility. And so I think it's maybe fair to say that the returns in the next cycle will be somewhere in between the returns of the previous two cycles.
And will we see diminishing returns? I think so. I'm curious if you think so, but I do think based on the way this is programmed, and as you said, scarcity, not only at the finality of 21 million Bitcoins, but scarcity coming in the available supply that nobody else is talking about out there. Not only are people going to be buying this and holding this, but it's becoming it's the available supply.
Exactly. It's not priced in, I think. This is not priced in. And so we can even see the halving now. We're very close to the next halving. That will actually have, again, an effect on this available supply. It will again increase or it will make Bitcoin even more scarce. So it will actually, I think it's not priced in at all. People are quite bearish in general still on Bitcoin, and so I think we will see some insane things in the next cycle. But the question remains like, okay, like which one is the dominant force, right? Is it the increase in market cap or the increase in scarcity? And so I don't know. So I cannot predict. I definitely have other indicators about how high Bitcoin can go. And it's maybe topic for an next discussion. I have some very good on-chain indicators that actually take into account this measurement of shrinking supply, and they show very accurate top accuracy for Bitcoin. And but I cannot really predict into the future. It's more like an indicator. If we start getting close to certain levels, that it starts signaling like this is the top area. It's difficult to predict because the supply obviously will change over time, and so I cannot predict into the future how much supply will shrink, or and so that's why that is difficult. But to still add like one point, and actually this was a topic that was talked about by Willy Woo. He kind of came up with this, and this the topic of paper Bitcoin, because actually in the past cycle we saw a lot of paper Bitcoin. There was trading of for example FTX, and so where people thought that they owned actually the underlying asset, but they only had an IOU. Like all Bitcoin maximalists have been advocating, not your keys, not your coins. But obviously it happens, like people are lazy in general. They just think it's easier to leave it on exchange. It won't happen to me. And so, but we saw a lot of paper Bitcoin, which affected the market. And I also think if we here, what I actually show in green is the futures market. So the futures market, and this was an argument of Willy Woo actually, that he said that the future market can manipulate Bitcoin's price, because you don't need the underlying asset to short Bitcoin. So you can actually on futures you can short by just with USD only, and no need for the underlying asset. And therefore he argued that that was like paper Bitcoin on top of Bitcoin. I do not fully agree with his take on that, but I do think there's different forms of paper Bitcoin. So as I said, FTX, where an IOU is a different form of paper Bitcoin than futures market. I think futures can definitely have like a short term, can kind of manipulate price in the short term, but in the long term not, because in Bitcoin you actually pay a funding rate. So if you, for example, go long or go short, in this case short, obviously, to manipulate Bitcoin's price, you start paying a funding rate. So it can become very expensive to go short, and so eventually you might be priced out, and you have to sell your contracts. And so it's yeah. was there a lot of paper Bitcoin? Yeah, there was, and we will have to track in the future like how much effect that will have on top of the actual supply. And so therefore I show it in the chart, in this chart, and you can actually see that this paper Bitcoin here made Bitcoin even more abundant during that previous bull market.
You have so many great charts through all this. And by the way, anybody that's been watching here on BitLab Academy, make sure if you haven't yet, hit that like button, subscribe, join us here, because the best investment you can make, especially for free, is your time. And your time, what are you spending it doing? Watching TV, getting more acquainted with the characters you're watching? Are you getting acquainted with the data of the best asset in the history? I love every bit of what you shared today. And I really want to encourage everybody to go back, watch this through again, see how if you can integrate it. And there's a lot of different platforms out there, from Root's platform, Bitcoin Strategy Platform.com. Make sure you check it out. There's also Glassnode, CryptoQuant, look into Bitcoin.com, check Onchain.com. I think Chain Exposed as well. There's a lot of different utilities that you can do to at least get started, but watch through this video again. And if you watched from Discover Crypto, if you watch this shortened clip, make sure you click the link down below in the description to watch the full-length version of this, because we went through about 25 different charts on here and a brilliant explanation of why all these different data points matter, and to making sure you have an edge so you can dominate this market. So before we go, Root, I just again want to say thank you for being here, but do you have any, a couple thoughts or anything that you're looking at going into 2024, 2025 with all the hype, with all the exuberance? What would be your message to anybody in this space coming in right now or feeling any bit of frustration?
Yeah, as I said before a few times already, I wouldn't want to be out of the market. So I'm here for it. I'm excited. I look at a Bitcoin that seems to be becoming more scarce, and so I'm excited about the next cycles. And I have patience as well. So if we don't get an ETF approval, I'm okay with that. It will just take a little longer. I'm fine with that. But I'm very excited, and I'm not hiding behind the carrot. I mean, maybe I would still like to talk that, because people think sometimes he's hiding his face, but it's not that. It's actually because I'm so bullish about Bitcoin. Thinking that Bitcoin will do 100x at some point. For the safety of my family and my future family, I want to stay anonymous. I mean, we hung out in Miami, Kelly, and it was great fun. You've met me in real life, and so many people did at the conferences, and so I hope people understand that I'm not that my privacy is because I'm bullish on Bitcoin.
I mean, I totally agree with you on all accords. And again, you do not have a carrot for a face. A person, you're a lovely guy. I had a great time. Everybody was out partying Bitcoin Miami. You and I took a walk down to the beach and sat and talked about on-chain charts and data, because we're so excited about this. And I hope everybody that's watching this can be excited about, even if you've never bought. If you've bought, you're way ahead of the pack. If you're just watching this video, you are so far ahead of about 7 billion people on the planet, because only the estimates are around 400 to 500 million people have had some exposure of any kind, whether they bought and sold or bought and held. That's it. And there's 8 billion people in the world. You're so far ahead of the curve. So I just want to preach encouragement to everybody. Stick with it. Hit the like button. Join us here in BitLab Academy. Join us at Discover Crypto. If you haven't yet, make sure you head over to @TheRationalRoot. Check him out. He's got all kind of great stuff he shares on a regular basis. He's talking at conferences. He's breaking down charts. And also make sure you give me a follow here at Kelly Kellam, Kelly Kellam. And of course, BitLab Academy's page right here at Academy BitLab. And if you haven't yet, if you're feeling lost, get into our community over here at BitLab. We've got a great Discord sharing all kind of different charts, setups, ideas, thoughts. And of course, you get access to that here right at bitlabacademy.com. Join us here. We're breaking it all down for you step by step. We have a whole on-chain data analysis course right here as well to help get you started if route here did not just set you straight. Get involved with us. I hope you all have an absolutely wonderful, wonderful weekend. Enjoy your Saturday. Get out of the charts for a little bit. Reset your mind. Come back fresh and be ambitiously curious. That's all I got for you all. Hope you all have a wonderful day. Thank you all for tuning in. Again, my name's Kellam. Thank you for being here with us. Hit that like button. Hit that subscribe button. Drop your comments down below. Where do you think the market's going pre-halving? Is it going down? Is it going to hold here? Where do you think it's going to be December 2025? That's all I got for you. Hope you all have a wonderful day. Adios, muchachos.